So what if someone told you that you can actually convert $10,000 into $42 million in just a time span of 23 months? Sounds like a scam, right? Well, it actually isn't. And that's what we're going to talk about in this video. How trader Dan Zanger made such a mammoth amount of return with a tiny principal and in such a short amount of time. Now, before we start, because my thumbnail says 29,000% returns, this is basically his verified returns in the first year. But the exact claim turns out to be $10,700 converted into $42 million in just the span of 23 months. That is 392,000% return. My mind is just exploding inside thinking about this big numbers. And again, that too in 23 months. So I want to show you the letter of his performance, which was actually verified and audited by Performance Measurement Service Bureau called the EFRON. And you can find the same on his website. So I want to point you guys out to this particular paragraph. The performance of the fund was such that it was impossible to graph your returns on the same page as standard stock market indices. The scaling would simply not accommodate your 29,223% annual return alongside the 23% earned by the S&P 500. For the same reason, it was not possible to illustrate your performance relative to money manager universes. So let's deep dive in, let's understand his method. But before that, a little bit about his background. So before he took the big leap and bet on himself in the markets, Dan Zanger actually worked for 20 years building exotic pools for the rich and famous in Beverly Hills. But while working his job, he always kept a track of the stock market. It was his passion. In fact, for many years when he was en route to jobs, he'd listen on the radio of the real-time quotes on his stocks. He'd even make trades from his mobile phone while he was driving around. So the first taste of trading and the first taste of chart patterns he got was from this TV presenter on a business channel. So every time half an hour after the market closed, a gentleman named Gene Morgan presented his show, and it was called Charting the Market. He would manually mark up the charts of stocks and the market, showing things like parabolic curves, flags, pennants, cup and handle patterns, and others. He then showed what these stocks did later after they had left these patterns. Dan was astounded that charts and various patterns could actually foretell price movement and also signal when a market move had ended. One day when he was watching the show, a stock exploded from $1, and this is when Dan made his first purchase. And then he sold it after a few weeks later at $3. That's a 200% return. Dan was hooked. So after that little success, you would think that, okay, Dan would have then gone to reading books and attending seminars, but that wasn't the case. Back in the 70s and 80s, there were no websites or Google, nothing. He just studied stock quotes in the daily newspaper, looked for cheap stocks, and got hooked to tape reading. Basically, watching which stocks were moving and then trying to trade them. For a while, he did not make any progress. Then one day, he decided to invest in himself and attend the William O'Neill seminar. And that changed everything. There's a strategy called the Can Slim strategy in his book, How to Make Money in Stocks. And I've seen many people swear by this strategy. Even Dan swears by this little strategy of finding great stocks. Now again, just a side note, I have been covering all the US investing champions and their trading methodologies, videos of which you can actually watch on my channel. And I've seen almost everyone swears by this book, How to Make Money in Stocks. Now, super traders have made their own version of the Can Slim strategies, but the root, the source of all the power remains out here in this one little book. Well, it's not so little, it's around 500 pages or something. So be sure to actually read it and keep this in your treasure chest. Coming back to Dan Zanger's story, there are two legendary books that Dan suggests: Technical Analysis of Stock Trends and Reminiscence of a Stock Operator. Now, when Dan was asked was he successful in trading at the start, he says no, not even close. As I said earlier, back in the 70s and 80s, there were no computers, no charting softwares, nothing like what we have today. He literally used to buy chart books on the weekends and flip through pages trying to spot patterns like the cup and handle or the flags, which he couldn't even find it back then. It literally took him years to understand how charts work. Then in 1989, he finally got his first computer, in which he installed the AIQ trading software and started scanning through hundreds and hundreds of charts a day. And that's when he actually began to buy stocks on the move. And things started clicking out here until the market hit a correction. And that hit Dan really hard. He says in his interview when the correction hit him, he didn't even know. He thought, what the hell is a correction? That was a tough lesson for him. But that's how he really learned, the hard way. Now we know about the verified and audited returns for the 1 year. But when Dan was asked whether the rumors were true about the 42 million, he says yes. He really did turn $10,000 into $42 million, and that too in 23 months. And he also says in his interview that he wouldn't even have told the world about it if one of his newsletter subscribers hadn't made millions using Dan's stock picks. And that's when a journalist from Fortune magazine came calling. They were doing a story on people who actually made a huge return during the tech bubble run. And once they heard of Dan, they had to talk to him. So here's how it actually went down. First, he converted the $10,775 to be exact into $2.6 million in just the first year. Then it shot up to $18 million in 18 months and finally hit $42 million in 23 months. The first part, it's verified, and the later part, he says you just have to take his word for it. When he was asked whether he could repeat that insane performance again, and he's not even hesitant about it and believes he can actually do this again, especially if another big market bubble comes around. But he's clear about one thing, which we should all take a note of, that the level of success did not happen overnight. It took him more than 6 years of grinding, studying charts 30 hours a week before everything finally clicked. So what kind of trader is Dan Zanger really? He calls himself a momentum trader with a swing trading style. Every move that he makes is based on chart patterns, volume, and stock behavior. It's nothing random. It's all structure. Some of his trades just last 20 minutes. Those are the quick ones that don't show any power. And others can go on for 10 weeks. But most of the time, his trades last around 6 to 12 days. That's the sweet spot for him. And yes, he is a systematic trader. He keeps repeating the same process, buying the same kind of stocks with the same price action, breaking out of the same kinds of bases. But though being a systematic trader, he also uses his judgment. If the breakout starts failing, he doesn't force it. That's the signal that the market is cooling off and maybe it's time to go to cash or even short. And if the price action doesn't feel right, he simply skips the trade. No hesitation out there. In his word, the approach is very simple. He owns what the big institutions want to own, and he goes when they go. He's always scanning, always hunting for leading high beta stocks, breaking out of strong patterns. So when Dan was asked whether he used options during his legendary run, Dan says that he actually did not even start to make money until he quit playing options. His fortune purely comes from trading stocks. Now, when it comes to charting tools, Dan keeps it very simple. He does not use any fancy indicators like the RSI, the MACD, nothing. He says he only uses volume and chart patterns. That's it. Everything else looks pretty on the chart, but it doesn't actually help, especially in strong trending markets. For him, volume is everything. He says no stock moves up without volume. The bigger the volume, the bigger is the potential move. His most favorite setup is actually the cup and handle pattern, a pattern behind many of his biggest winners. And when it comes to testing ideas, he says that he just doesn't. Dan says that he's already done all the testing he needs. He simply just uses chart patterns, volumes, and price action. And he's constantly scanning every single day, at least once or even sometimes twice in a day, manually flipping through around 1,500 charts on his AIQ software. It takes him about an hour each time, and when asked how many setups he uses, it's around 20 give or take. And with all this work, he also finds time to actually write his newsletter. He says in his interview that 12-hour days are nothing new to him. He scans stocks for himself and also writes the report every single night. And that is the kind of grind it actually takes to be a super performer. Now let's talk a little bit about his risk management. So when it comes to risk management, Dan's approach all depends on the market condition and where he is currently in that particular move. He says the further extended the market gets in price and in time, the more risk you're taking. So when things start looking overheated, Dan begins to peel back, selling off the stocks that have gone too vertical and adding to the ones that are breaking out of solid fresh bases. At the same time, he starts preparing to go short and builds a plan to go cash fast if the trend breaks. So when asked that how does he know when he is in a wrong trade, his answer is sharp and simple. If a stock doesn't move up fast right after breaking out, sometimes within minutes, he says, why keep the capital stuck in something that's not moving when he could be in a one that is? So if it doesn't pop, or worse, if it starts to drop, then he's out. He has his own motto saying, the only good stock is a stock going up. Now let's come to his position size sizing. Now again, when it comes to position sizing for him, it all comes down to the market condition. It completely depends on the strength of the market and the stock itself. If he finds a true powerhouse, a stock with massive earnings growth, under-owned, and leading like a new niche like Yahoo back in the bubble days, he'll go big, up to 15% of his equity in that one particular stock on a 2-to-1 margin. At start of his run, he traded just one stock at a time. If the stock runs strong, he'll own it only for 2 to 5 days. And as the time passes by, he will increase his allocation, owning 2 stocks at a time. So he says that he stays at 2 stocks at a time until he goes over the $500,000 portfolio benchmark. Then he branches out to owning 3 stocks. He pretty much stays with 3 stocks until he goes over $4 million in cash value. And when he goes above $20 million, then he has like 7 or 8 stocks. At the peak of his run, he owns about maximum 12 stocks at any given time. And managing those trades is a constant process. Dan's always adjusting. He's adding or trimming positions as the stock moves. If the stock surges, he takes some profits and rolls that money into a new trade that may be having a fresh breakout. His logic is simple. He says if the stock doesn't move, neither does his portfolio. So he doesn't just hold to own a good company. He says that the only reason to own a stock is to make money. Now let's speak about his stop losses and targets. So when asked, Dan says that he doesn't use trailing stop losses or profit targets at all. He says that no one can ever know where a stock will finally go. So instead, he lets the stock's own behavior guide him. It tells him when to enter and when to exit. So you see, even though there's a system, there's also his instinct constantly playing the game. Now, here comes the really important part. So when he was actually asked about his win rate, Dan says that he doesn't even look at it. He doesn't even count it. So Dan says that he buys a lot of stocks which are coming out of bases because you never know which one will explode. But wait, didn't we just speak about him owning just 7 or 8 stocks and maximum 12 stocks at his prime? So this is what I'm assuming. All these positions, all these stocks which he's buying, which are coming out of the fresh bases, he's buying a tracking position, which are small, little, tiny positions just to track the stocks. I've made a video on that. You should totally go check it out, what it is and how it can be beneficial to actually not miss the big moves or not miss the timing when the stock is going to explode. So I'm assuming that when he says that he buys a lot of stocks, he's buying these little tiny positions, and when it does rocket up, he knows that he's found a winner. And that's where all the big returns come from, by pouring majority of his money into the big movers and dumping the ones that fail to take off right away. Now let's also speak about his losses. His biggest drawdown has been around 75%. That's huge. Normally his losses during the corrections are about 20%, but the early 2000 bear market had completely crushed him. Half of that 75% just came in one day when the fiber optic sector had collapsed. Dan's portfolio had dropped to 32% in a single day. So did he ever want to stop trading after that? So he admits in his interview that sometimes he did, but his mantra kept him going. Never stop watching the market, and he never has. That particular experience, he says that it did not make him a better trader. It just made him a wiser trader. And he jokes around that when the next time he sees like a bear market, he's just taking a flight to Maui and just chilling there until the bear market is over. Now let's also talk about controlling his emotions. He says there were days he made $1 million to $3 million like it was nothing. He describes it as unreal, watching it happen live on the screens. But here's this one thing, it didn't excite him. He says that before he used to lose control, that he had found some kind of nirvana only to give it back later. So he trained himself to never get emotional about money. Now here's a little thing to end the note with. When he was asked about fear, greed and self-esteem, Dan said something powerful. Self-esteem is something that can make or break you. He explained that many traders sabotage themselves without even them knowing. If deep down you believe that you're not good enough or don't deserve success, then you'll keep finding ways to lose it. You have to want it. You truly have to want it. And when he was asked what separates him from other traders who got wiped out, he just says perseverance. It's his character to never give up. He never ever gives up. Every time he lost money, he didn't sulk. He went straight back to the charts, studying, questioning, learning. With time, persistence turns confusion into clarity. It took him 6 years to study charts 30 hours a week before it all clicked. So his message to traders, it's easier to find a stock to buy than to know which one will really break out. So don't ever give up. And that's it from his super trader journey. I have learned a lot from this, and I hope that I brought some value to you guys as well. So if you found this helpful, please consider subscribing. Please do subscribe, and I'm gonna see you in the next one. Yeah.